Alright, so identifying current market structure and current bias is the #1 thing we have to do as a day traders before we start trading during the day. And today we started with a tiny little downtrend and we instantly shot through the EMA. EMA was holding prices and we were just making series of higher highs and higher lows. EMA is putting up higher and we cannot even touch the EMA. So right off the gate, I knew we are in an uptrend, and I was trying to locate this trend line, and this is what I end up with. I was trying to eyeball it, something like this. I was just playing with it, but at the end of the day, this is what I came up with. I like how the 3 touches confirm the trend line right here. Nevertheless, we are making series higher highs, higher lows, so this is an uptrend. EMA is putting up higher, so we definitely should be only looking to go long. But where are we going to find the most profitable setups as possible? At the key entry points, and the key entry points are trend lines and EMA and support and resistance lines. So we are rallying up higher today. We touched the upper side of the channel, so you know what's most likely going to happen. We're going to go to the other side and we have a new high right here. Pullback, first entry long, pullback, second entry long. Now the second entry long is according to our rules, and it is a high probability setup at the key entry point, so this is good. And you may be wondering why I marked this trade even with we don't have a break and a new low. Well, it's because of the overshoot. We sold off so much that we overshot this small little channel working up lower, and there's going to be a lot of bulls waiting and buying this trend line. It is a second entry long as well, so even though we don't have a break and a new low, I'm using the overshoot to give me fuel, because I know a lot of bears, they jump on board way too much. They should have been going short here in an uptrend, so I'm using the overshoot because I'm expecting for prices to break the trend line and go in the opposite direction. So this is a high probability setup. Second entry long at the key entry point, and you can see how price action reacted to it. And we have it once again. Prices made a new high right here. We have a pullback, first entry long, but we don't, even if it's at the key entry point, yes, but it is just a first entry and we don't have a break and a new low. So we have to have one or the other. Either this is going to be second entry long or we have a break and a new low. But it didn't happen. We have actually a second entry trigger right here above this horrible doji looking bearish bar. So this is not according to our rules to take this, because the signal bar is absolutely horrible. When we are in an uptrend, we are looking for bullish signal bars and not bearish. So I was treating this as a legit second entry. First entry long, pullback, second entry long. Even technically second entry long trigger right here. But it is such a horrible signal bar that I didn't count it as a second entry, because this is not the good signal bar in an uptrend. This is a horrible doji looking bearish bar. So we have a break, attempt to make a new low. It is the first break of this channel, and once the prices break the trend line, there's most likely going to be a retest of a new high. This is the trend line rule, and this was what I was playing today, and I like this setup. I think it's a good setup to take. And you can see prices broke the trend line, they made the new high, and once we make a new high, you know that you're expecting at least correction or possibly reversal, and this is what happened. So from this point on, when you have a break and a new high, you should stop looking for longs immediately. I mean, I'm not saying that we may not go long later on, we may, but just right after this point, after breaking a new high, you need to let them give a market a little bit of room, because after breaking a new high, there's going to be at least correction. And you can see more. There's a second entry long right here, but even though it would have worked, we cannot take this entry. It's not according to our rules. This is not higher probability setup. Even though it's a second entry at the key entry point, we still don't have a break. We already have a break and a new high, so we don't want to take chances on still going high at the very high of the day. So let the correction play out. You have to be the smart trader and identify what's the best context. And you can see prices just consolidated a little bit. We went into this consolidation. And from this point on, once we rallied up higher through EMA like this is where I thought we may resume this uptrend. Because we made the low right here and we pushed through the EMA like it's almost not even there. And first entry short, pullback, second entry short. This is where I went long. And I'm going to show you guys how it looked. It actually looked like this, and it's looking at this point on, it's looking like the trend is resuming. Yes, we already have a break and a new high, but notice how the correction was very faded quickly. We instantly rallied up through EMA, first entry short, second entry short. EMA is holding prices. So from this point on, it is looking, there's a multiple signs that we may continue going higher. Nevertheless, it was still good enough for scalp, and there's a lot of room. It may not seem like there's a lot of room, but trust me, you know, even me going for 10 ticks, there was a lot of room. So this is a great thing about being a scalper. And you can see this trend line working up higher. Now we have a break and a new high, because this high was a little bit lower than this high, but this high is definitely higher than this high. So now we have a break and a new high. And you can see there's some resistance starting to form here, but we shoot through the EMA, and this is a big sign. The way we have a break and a new high of this bullish uptrend, so this bullish uptrend should be over now, and definitely on the bigger picture as well, because we already have the new high right here, and we should have rallied up higher. And the fact that we didn't rally up higher right here to this area, hopefully you guys can see it, the fact that we didn't rally up higher, you know, there's a big indication that bulls already threw in their towel in. This was the all, they were quite satisfied with this, at least for the moment. So the way we shoot through the EMA, this is the beginning of a reversal pattern. How we nicely shoot through the EMA is putting no resistance at all. New low right here, first entry short, pull back, second entry short. And I like going short on this bar. This is a reversal pattern. Two failed attempts to go lower, two failed attempts to go lower, looking like a reversal pattern. We have a resistance right here. We push through the EMA. The uptrend has played out, is over, and we are now in this consolidation. So we're probably heading a little bit lower, and you can see the price action work to the T. And at this point, I was expecting something like this. And I was quite surprised we bounced much earlier. I was expecting, normally the prices will bounce between the 50 and 61-80% area, but we bounced much quicker. I was surprised that we actually, this was much bigger bullish uptrend than I had expected earlier this day. And this was all the bearish rally that we had. And right now we have a break and a new low of this trend line working lower. We're just kind of consolidating near the EMA. My advice is to skip this little congestions, even though it would have worked all the scalps to either side. I really wasn't sure what to do, because it's too of a bullish day to go short. But this correction is not looking like, this downtrend is looking like it's not over yet. So I don't want to go long either at this point. So I just waited out here, and you can see we push higher, we pull back, and you can see you can use this low, try to set up the trend line. You can see it's fitting from the highs. Trend line is nicely touching prices of the highs, and now you can use this to set up the trend line right here. And you have a new low right here, pull back, first entry short, pull back, second entry short. But once again, horrible signal bar. We are now looking to go long. Even though it is a failed second entry short at the EMA, take a look what a horrible signal bar it is. This is a doji, not doji, this is a bearish, almost a bearish pin bar at the EMA. At the very close of the bar, all the bears jump in the market and push the market lower. This is not the sign I want to see. I want to see the opposite. I want prices trade lower and at the very close trade higher and then go long. So at this point on, when you're looking at this, the second entry long triggered, yes. But once again, this is a horrible signal bar. It's not even close being bullish. This is not, there's not even a little bullish tint to it. So the failed second entry short failed right here, but you cannot take this because it is horrible signal bar. And once we made this third bounce of the trend line that confirmed the trend line, big bullish bar, this is what I want to see. It's off the key entry point according to our rules. Market is reversing now. You can see that the bearish momentum is starting to waver because we are jumping through up and down through the EMA, but the bulls are getting stronger and stronger each time. And we are working up higher. Once again, we touched the high side, so we're probably heading to the lower side. This is just like a trading range. Little correction, working lower, break and new low. Once again, follow the short-term trend lines and wait for the break and the new lows. Just like on the bigger picture, short-term trend lines will help you as well. They're the key to price action trading. We have a break and a new low. Actually, we have a second entry long the trigger right here. I didn't even notice. I thought this was a second entry. You have a new high right here, pull back, first entry, tiny little first entry long, pull back, second entry long. But as you can see, This is just, it is still inside of the trend line and it is below EMA. So once we have a break and a new low, and now you're at the key entry point. This is what we want to see. This is a fourth bounce off the trend line. The trend line is confirmed, nicely touching the trend line, big bullish bar off the trend line. We roll it up through the EMA and we close above the EMA. We have a break and a new low, so this bearish correction is over. And it's not technically second entry long, but it's still good entry if you want to take a chance. We have a break of this uptrend working up lower, but we don't want to go short yet. And you can see the perfect price action. These rules apply and they work every single day, you know, all time frames, all markets, because we have this correction working lower. We have a break, new low right here. This bearish correction is over now, but on the bigger picture, we are still looking to go long off of this bullish uptrend. And overall, the day is still having the bullish bias. So all the bearish activity is starting to look very slow and very weak. So just let these bearish activities play out. Let them give their room. Let them do their thing. And you want to be smart. You want to be buying with the trend. So once we have a break and a new low, perfect trend line rule, perfect price action, we can now be looking to go long. I notice right here, new low right here. First entry short, pull back, second entry short, failed. But once again, I already mentioned it in my previous video, I think. Look how far away you're from EMA. You cannot take a reversal pattern this far away from EMA. And here's the similar thing that happened. I'm gonna mark it for you guys so you guys can see. You have a new low right here. You have a first entry short, pull back, second entry short. So even though it is two failed attempts, look how far away you're from EMA. You're not at the key entry point. As a matter of fact, you're far away from key entry point. This is not reversal pattern. Just like you should have waited to get to key entry point right here, the same way you need to wait for prices to get at least closer to key entry point right here. And even now we're not close to the key entry point. So I only mark this if you want to be a little bit of aggressive, because me personally, I like for prices to touch the EMA. But nevertheless, hopefully you guys can see first entry short, second entry short, why being far away from key entry point is not a good idea to go long here. You need to prices to, you don't want to go long at the very high. You want to buy the corrections. The lower you buy, the better. Just like here, the lower you buy, the better. You want to buy the correction. So failed second entry short, you're so far away from EMA. Stay patient. Don't jump the gun. There's going to be plenty more setups for you to take during the day. And from this point on, once we pushed through EMA and we went into this uptrend, when the prices were right here with the break and a new high like here, I was expecting for prices to consolidate a little bit and for bears to once again jump into the market and push market a little bit lower. But since we kept continuing going higher like this, take a look how we didn't even touch EMA. EMA is pointing up higher. This is starting to turn into full-on uptrend at this point on. This is starting to look like a very bullish day. We have a first entry long right here, pull back, second entry long right here. But once again, we have a break and a new high, few legs to new high. Even though it's looking like the bears are not going to be successful to take it down, I still was a little bit hesitant, because after breaking a new high, you just want to give market a little bit more room. You really want to. So I think it's much smarter to give market a little bit more room here. But once you have this new low right here, first entry short, pull back, second entry short at the EMA, nice bullish reversal bar. Two failed attempts by the bears to take the market lower, failed both times. EMA is holding prices, bullish bias overall, according to our rules, high probability setup. Let's take it. And from this point on, this is then turning into an uptrend. And once again, new high right here. You don't want to keep going long at the very high. Don't be one of those guys or girls who's going long at the very high of the day. You need to buy the dips at the very low. It is counterintuitive, I know, but that's the way the trading is designed. New high right here, first entry long, pull back, second entry long, at the key entry point, at the trend line. You can see the trend line is fitting off the tops. This is how you want to find the trend line. If you cannot find the trend line off the lows, just start from the highs in an uptrend, and in a downtrend, start from the lows. Second entry long, high probability setup, break and a new low at the key entry point. Perfect setup, high probability setup according to our rules. And the last setup that I marked for today was this second entry long at the key entry point at the EMA. Nice bullish reversal bar, once again, it's starting to look like a very bullish uptrend. Right now the market's starting to waver a little bit. Easily would have gotten your scalp, but you know, the days turn. Normally I like to trade the earlier part of the day, but I'll be honest with you, today was much better to trade the later session, especially these trades like here, this bullish uptrend that resumed off of this correction. Very good to trade and very easy. If you just wait for good setups, and you can see how, you know, the second entries and failed second entries at the key entry points, they're so high probability. It just really shows you that trading is not that hard if you follow these rules and wait for the proper setups. The probability is at least 80 to 90% of these setups, so you can be consistent at this. This was the bigger picture for the day. Once again, started with an uptrend. Price action trend line rules. After break, there's going to be new high, and then wait for correction or possible reversal, which happened exactly to the T right here. But I like looking to go long here because it looked at the time, it looked like we may resume. And we just needed a little bit more correction. We just needed to trap more bears into the market, which happened. We were trapping the bears all the way up here, and then they rallied up the market higher. So the institutions know what they're doing, and our job is just to follow them. We don't want to, once they start going higher, we just want to follow them, wait for the high probability setups, and take the little portion of their money, because they're the ones who were trading the thousands of contracts, and we just want to take the small parts here and there. And this is what we're trying to do here. So hopefully you guys had a good trading day. Very good day to start the week. And study the charts. It's very useful. I know a lot of you guys like the live videos, and I know I'm going to try to make these, still continue to do these. But you guys need to see the entire money cycle throughout the year. So this is why I need to make the videos even when I'm not making live videos, because you need to see the market go through all the phases, because sometimes it's just an uptrend, sometimes it's trading range into uptrend. Today was uptrend, trading range, uptrend. So you need to train your eye to see, to identify the patterns. And this is why I try to make these lessons, even though I know you guys love these live videos. You still need to study this. This is the way I learned it. I went back and I studied the chart after the fact as well, because if you just sit here and trade it and then you don't learn from your mistakes, I don't think you're going to learn much. You can if you're very talented, but you can't really learn that much. Nevertheless, see you guys in the next video. Bye guys.